Hi, I'm Karen Lee. I'm a certified financial planner and the owner of Karen Lee & Associates and a registered representative with LPL Financial. Today we're going to discuss different investment avenues for the typical investor. But before we talk about stocks, bonds, mutual funds, which are simply baskets of stocks and bonds, savings accounts, CDs, annuities, and alternative investments, before we talk about those, let's talk about how you know you're even ready to start investing. It's very, very important that you build a strong financial foundation before you start looking into different investment avenues. This is a picture of a financial plan. I used to be an architect, and I always use the analogy that building a strong financial house is no different than building a strong house that you live in. The most important thing about the house you live in is the foundation. Building a strong financial foundation is imperative before we answer this question: what are the different investment avenues? A good financial foundation means that you have taken care of your risk management and you have some defensive investments. Risk management would include your health insurance, life insurance if you need it, disability insurance in the event that you're unable to work, long-term care, and your property and casualty insurance on your car and your home and your toys. Defensive investments, we usually talk about this as your emergency fund. As all of us know, and especially during hard economic times, it's important to have money to fall back on if you lose your job, if you're sick, and you're on your long-term disability. When I first started in this business 24 years ago, we told people they should have an emergency fund of 3 to 6 months. With this recent financial crisis, we're recommending on the low end 6 months, up to 12 months of enough money to pay your expenses monthly. Now, once you have a strong foundation, now you're ready to get into the part of your financial plan that we call wealth accumulation. In wealth accumulation, again, you may use all the different types of investments that we already talked about, but the question is, what are my avenues to get to those investments? There's several different avenues. The first one I want to talk about is what I call do-it-yourself. With do-it-yourself, you're going to need to do a lot of research. You're going to need to teach yourself about asset allocation, time frames for investing, what kinds of investments are out there. Should I buy individual stocks and bonds or should I buy mutual funds? Then you're going to probably go online, either with one of the no-load investment companies or perhaps open up a brokerage account with an E-Trade or a Scottrade or low-cost investing platform. But with this, you want to be a self-starter, someone who loves to do research and committed to watching your accounts. A second avenue to getting at these investments would be to use a financial advisor. I'm going to differentiate between a financial advisor and a financial planner. A financial advisor is someone whose specialty is in money management. With that person, you might go to them just with an account and say, could you help me handle this account? Hopefully, they'll ask you questions about the purpose of the money, the time frame it's going to be invested for, and how much risk you feel like you can tolerate. The third avenue I want to talk about is using a comprehensive financial planner. With a comprehensive financial planner, they're still going to ultimately help you with the money management of that one account, but they're typically going to take you through an entire process that looks like this. They're going to come in and check if your foundation is strong and if you're ready to take on the risk involved in accumulating wealth using stock market investments. So they'll take a look at, do you have all the right kind of insurance? Do you have enough money for emergencies? Then they'll get to the same place the financial advisor does and recommend which of the different investments make sense for you to use given your time frame to keep that money invested, as well as your tolerance for the ups and downs and the risk investing in the volatile stock markets. So again, the most important thing about answering this question, what investment avenues should I use, are, should you even be investing in the first place? Do you have a strong financial foundation? Because the last thing you want to do is invest in volatile investments, and if something goes wrong in your life, you don't have any money to just make the bills. So let's remember, always look at your overall financial plan before you go into different investment vehicles. And then once you're ready, consider doing it on your own, working with a financial advisor, or doing a comprehensive financial plan that takes a look at the whole picture. Hopefully we've answered your question today on what are the different investment avenues available for the typical investor. My name is Karen Lee. I'm a certified financial planner, the owner of Karen Lee & Associates, and a registered representative with LPL Financial.